All right. Hi, everybody, and welcome to another edition of Talking Finance with myself. Today, I've got two very special guests all the way in New South Wales. I've got Paul Smith from ActivePipe, and I've got a man that pretty much needs no introduction if you're in New South Wales. If you don't know him, I don't think you should really be in finance at the moment, right? So, the awesome Zarko, State Manager of the MFWA in New South Wales. Gentlemen, thank you for joining me today on a November warm day, hopefully for you guys up there in New South Wales.
Yeah.
Can I just start with you, Paul? Can I just ask how you're going? Because obviously you got a newborn. So how's your sleep?
Oh, life's going good. We're crazy parents with three kids, 6, 2, and 3 months old. So Christmas coming around the corner is a very exciting time for everybody here. So just trying to stay sane and looking forward to a big runway before a nice long break for Christmas and New Year's.
Awesome. When you got 3, that means you're outnumbered, and it's going to get expensive every Christmas, right? So
yeah, it's you move from sort of man-to-man coverage to zone, and it's a totally different
I love that sports metaphor. All right, Zach, what about yourself, mate? How are you going?
Life's great. It's great to have some newfound freedoms. Got a lot of energy out in the city, and I'm sure you're feeling that energy in your corner of the metaverse today. There's a good vibe in Sydney and New South Wales in general, starting to open up bit by bit, and people are enjoying their own backyards and some further flung places as well. So there's good energy leading into Christmas here.
That's awesome. And I love the fact that you're using the word metaverse now. I'm still catching on to that phrase as much as I say I'm in tech, but yeah, it takes a bit to get used to, eh? But anyway, gentlemen, we're here today to have a chat about a special little project that Paul, you and your team did with regards to looking at, I suppose, the behaviors of what makes a customer choose a bank over a broker. Now, you've done that study, I think, was it earlier this year?
We completed the study. We completed this round of research in June, and we've done a couple little projects on it, and definitely excited to walk everyone through sort of just our methodology, how we run it, why we run it, and then obviously just sort of what we found, and hopefully give everyone some really good insights into the way consumers behave and rationalize things at sort of the beginning of that journey of looking at getting a new loan.
Absolutely. That'd be awesome, man. And Zarko, thank you today to join us as well, because I believe you guys did this little training session with the MFWA members in New South Wales already. I just thought it'd be a really good idea to introduce it to the wider F&C community as well nationally. So let's get the show on the road. So Paul, let's see what you've got what you guys have done and what the results show.
Sure thing. Excellent. I'll just confirm with you. You guys both see the presentation there on your screen?
Absolutely. Yes, we can.
Wonderful. So I guess I'll preface it by saying, just one of the things ActivePipe does, and we do as a business, is we do a lot of different research. And one of the things I know with research, and like I've done a lot in the past, and Zarko, you're an amazing statistician. You're one of the people even way back in the day who taught me this stuff, is all the surveys and all the things, hey, pick A, B, C, or D, tell us what you think on this. Like, none of those surveys we ever thought really gave us good insights into customers. Like, you're kind of just ticking boxes, or you're just writing things in. It's really hard to get a grasp at like how consumers actually feel about different things. So the way we do a lot of our research at ActivePipe is we do one-on-one focus group testing sessions, or not group testing sessions, one-on-one sessions with consumers. So we sit down on a Zoom. We sit down with people that have recently got a home loan, whether it's through a bank, whether it's through a broker, and we ask them a whole bunch of different questions. And the stuff we test them on, it's not a test of their skill in any way. It's just a chance for them to be like super brutally honest about their experiences, what worked, what didn't. Kind of we profile them a little bit, but as we profile them, we run them through sort of different scenarios later to see, what's going to impact their future decisions, and how maybe are they going to choose a broker next, or are they going to choose a bank? And if they did, what's sort of driving that decision? Is it something that happened a long time ago? Is it something that happened recently? Is it something the broker did or didn't do? So what I guess that we're going to run everyone through is just this study and some of the questions we asked and some of the answers we found. And the big overarching theme of it is really, when a borrower has in their mind, all right, it's time to get a new loan, well, how are we going to do it? Are we going to go to a bank, or are we going to go to a broker? So we'll walk you through sort of all those things. There are some really cool insights in there on just like what actually makes your customers loyal. Things that like, and again, this isn't me saying, hey, I know what's best. It's stuff that people are telling us, tactics brokers or even banks use that get people to come back and remain loyal. And then we'll sort of round everything off with some advice and tips. So this round of research was a pool of 60 people, 30-minute interviews where we just asked them a whole bunch of just different questions on things. This entire study and everything we're going to present is backed up with if you look at our white paper, you can watch the videos of these consumers actually telling us this stuff. So if you don't have time to watch this whole sort of interview we're going to do, definitely recommend, hit me up. I'll share the white paper with you and just listen to the interviews of these people and listen to how like a broker customer who isn't stayed in touch with, how they behave way differently than someone who is stayed in touch with, or listen to somebody talk about how frustrating it is to get their loan through a bank and basically get nothing but transactional emails for 2 years. So diving
Can
into,
I just jump in and just say that I'd love to be able to share that in the file section as well for the Finance and Coffee audience.
Yeah, perfect.
So I'll get that later on, and then also I'll get the links if there's a YouTube channel to view those interviews as well. I'd love to share that as well.
They're all the videos are linked in the white paper to YouTube, so you can watch them all. And there's 2 papers we have in there, and like I said, it's even if you don't want to listen to this, jump in there and listen to the actual things people say about what works and what doesn't. I think it's fantastic.
That's awesome.
So the overarching sort of big thing that was really interesting to me, and I always like to lead on this, that what borrowers basically told us, no matter what they said before or after, everyone just said, look, I made this decision because I want to just get the best rate. I want it to be easy, and I want to work with somebody that I trust. Now, what was super interesting was people that went to banks said these are the 3 most important things. People that went to brokers said that these are the 3 most important things. But there is so much different context and so many different things that skew what they think is getting the best rate, what is an easy process. And if you unpack it, there's a lot of different tactics you can use to actually, maybe acquire more bank customers or make sure customers of yours don't go to a bank in the future. So it was really what drives separation in either channel is having more trust in one channel than another. So direct to bank customers, and we'll dive into more detail on this, but at the highest level, a lot of them tended just to trust their own ability to pick and choose the right loan. They sort of, hey, my situation's easy. I know what I want to do. I can jump on a comparison site. I can ask my own questions. I know what to do. Not to say they're right or wrong, but it's just there's a lot of self-confidence there. A lot of these people, it's not that they're anti-broker, but there was like, look, I used a broker before, or I heard a story about a broker where like, oh, they pushed me to one product or they weren't objective. Again, it's not necessarily the truth or maybe even what the experience is, but this is what people's perception was. Direct to bank customers, I think many brokers would say, hey, look, yeah, you can find better process. You can get better rates and better processing times sometimes doing things on your own than going through a broker. Obviously, these direct to bank customers, they kind of told us they had less complex needs. Like it was pretty vanilla deal. So it's a lot easier to jump on a comparison site and figure out what you want to do. But ultimately, yeah, they just want more control in the process of negotiations. Whereas so broker customers on the other side, they're like, look, like I know this is all super important. I just don't have the time to go out and research all this. And the services of a broker right there, if I find one I trust and I like it, they're going to do it for me. And I definitely don't trust banks. I definitely don't trust lenders because they're not going to, and brokers would know this, and you guys would know this better than I would. They're not going to act in my best interest. They're not going to show me all the products out there. And there's just that sort of that level of trust people have. It's just, hey, I'm working with somebody who's on my side. And broker customers too are like, they're more likely just to go back to the same broker over and over. Rather, banking customers are just going to jump from different bank to bank. So those are some of the high level, like sort of major points that we found. I might maybe just pass to Zarko and see any feedback or commentary on just this slide here.
Yes, absolutely. So in those 5 points that Paul's displayed and you'll have access to by the Finance and Coffee library, if we look at those 5 points, it's really a blueprint for opportunities to win market share. So they're the reasons that people are choosing to go direct to bank rather than going to a broker. And what Paul and I and Deanne want to do today is give you a blueprint of opportunities that you can choose to pursue if you want to win these customers over. If you want to start to talk to these direct to bank customers and get them to actually put you on the mental menu, those 5 points are really the blueprint to actually do that with. And that's our intention today, is give you those options on how do I win more market share from clients who haven't engaged with me in the past.
Yeah, definitely. Deanne, any feedback on this or any questions you think members might have initially? Nope. Have we lost you there?
Oh, Sorry about that. Yeah, I was just going to say that. Yeah, I think the only one that I have is more of the fact that the clients who went to bank thinking that their own deal was vanilla, and that's always how it starts out, right? And then they tend to go to brokers after they find out that their own situation isn't vanilla.
100%. And one of the things this research undercovers is there is a supreme overconfidence in direct-to-bank customers that think, I know what I'm doing. Oh yeah, I know what an LVR is. I know LMI thresholds. I know bank policy, and they don't. Like when you dive into it just a little bit, they realize, hey, you can get them over their head pretty quick, but there's a stubbornness to it. And that's a lot of what we found with direct-to-bank customers. So obviously the 3 things most important, I've sort of covered that with what they told us. Why, when we looked at, we asked them a question, so why did you choose getting your loan through a bank versus a broker? That the vast majority of those, that 60% of people were like, yeah, look, my situation's easy. I know what I'm doing. So that vanilla side. So the majority of people you're dealing with have that real level of confidence that, look, I don't need help. You got about another quarter of people that just have that sort of, brokers, we had a bad experience, or they're untrustworthy. And again, sometimes it's maybe the broker, it's not, it's the customer's feeling. So it's not necessarily a fact. There's a lot of really difficult customers out there and stuff. And oftentimes you get the feeling with some of these people that they just didn't probably appreciate what the actual role the broker could play in the transaction. And then on the flip side of that, though, there were examples of things where brokers clearly didn't do the right thing during the transaction. There was a smaller percentage of people that just said, hey, look, I just found a deal that a broker couldn't match. And, you hear about that often with different online lenders and things like that. When we asked people, okay, so you've decided to get your loan, you go into a bank, what did you do first? What was the primary way you decided to research? The vast majority of people jump on comparison sites. You have your Finders, RateStars, CanCity, sites. You just type in compare home loans and you'll see, and we all do it, you can jump on and see hundreds of different loans, and they're often ranked in a non-organically way. They're ranked, so certainly you kind of have to pay to play. But people really trust that. And people thought, hey, I go there because it gives me an overview on everything in the market that I can see and look at and control a little bit of things. You had a number of people who shied away. So a quarter of people were like, look, I don't really love comparison sites, because they did know that they are biased. So they just go to lender websites and they just look up just products and stuff. And they were people that had, a lot of those people are the ones that, yeah, I'm really confident. I think I'm a savvier shopper because I go to lender websites instead of comparison sites. You've got a number of older school people who are like, look, we walk around, go to a branch, I talk to someone, and they liked that feeling of almost negotiating with a person. They felt like, hey, that's where my skill set lies. That's what I want to do. Smaller percentage of people just sort of call the lender, and a few other people just said, look, I just called my existing bank and that's all I did. When you look more at how many lenders did they speak to, the majority of people that 3 to 5 is the sweet spot, or more holistically, almost everyone was look at 1 to 5 lenders. After that, people didn't really dive into looking at too many others. And then direct-to-bank customers sometimes refinance their current deals through existing lenders. So ask them the question, okay, well, you refinance through your current lender. What made you go back and speak to them again? And the vast majority of people, and keep note of this because it comes up on the broker side of things, the vast majority of these people are like, oh, well, I was just out doing my normal thing and I saw an ad for cashback and I saw an ad for this rate. Mine wasn't as good, so I brought that to my bank. So the vast majority of these people are super rate driven. They're super cashback offers, rates, offers, enticement, things like that. And that is the big thing that motivated them to do really anything. I'll sort of stop at that point and ask Zarko, just to give a bit of a summary from your perspective on what we found here with direct-to-bank customers.
Yeah, you're right that the seeing the rate or seeing the cashback offer is what motivates them to take action. But what they will find once they converse with a broker is that it's more than about rate. And so we've almost conditioned the market to judge the effectiveness of their facilities and their solutions by what number precedes the interest rate. And we all know that's not necessarily the truth. So the rate will get them into the conversation. What happens thereafter is in our control. So if you're not currently communicating to your database, your clients could end up in that 80% in the graph that Paul had momentarily prior, where they are engaging and asking themselves, is there something better out there? And the danger is if they're not hearing from you on a regular basis, they might engage with someone else. And that's a risk to your business, and it's a risk to your portfolio of lending, and it's a risk to the strength of your business. The other point I wanted to make is in one of the earlier slides, one of the motivators for people going to a branch rather than going to a broker is they wanted the ability to use websites and they wanted the ability to use comparison sites. And where I see an opportunity there for brokers tuning in today is to actually spread the message far and wide that you are a living, breathing comparison site. That's what a broker does. By the very nature of a broker's process, we are comparing and contrasting the marketplace. And the added layer on that now that we can overlay to take away one of those points that Paul shared earlier about mistrust is we now have a responsibility to demonstrate that we are applying the best interest duty in every credit interaction we have. The credit interactions we have in 2021 are now a real once-in-a-generation opportunity for us to broadcast as individual practitioners and as an industry that we look after clients and customers better than any other distribution channel. So the best interest duty not only is a compliance requirement, but it's also a marketing opportunity. So I want to remind the MFAA members on tuning in today that the MFAA has put together 50 marketing slogans you can use to demonstrate how you having the best interest duty is great for consumers. Not about the compliance work involved, but about the opportunity it gives consumers to achieve peace of mind, which really can be used to deflate that argument about mistrust.
Yeah.
So some real opportunities there, Paul.
Yeah, for sure. Dan, just throw it to you for a sec before we talk about the broker data. Any questions or feedback on the direct-to-bank customers?
No, mate. Look, at the end of the day, I was going to say the same thing Zarko was going to say. So no, he's covered it off pretty well.
Perfect. Cool.
Yeah.
So when we flipped the sort of switch now and we looked at, the broker customers that we interviewed, we asked them, cool, all right, you decided to get your next loan, you want to go through a broker. How did you choose that broker? The majority of people, 45% of people we interviewed were like, look, I was recommended this broker by a family member, friend, somebody that I know and trust, told me about a broker they used where the service was awesome and decided to use them. Only a quarter of people actually told us I've returned to somebody I previously used. And that was kind of a bit of an alarming stat. And there were a few other people then sort of dribbles that were like, hey, I just jumped online and I looked at what other people were recommending. And it's not going to broker websites or anything or a broker Facebook page. It's going into different communities and like community groups and being like, hey, who's used a broker pro? Who do you recommend? And actually seeing what people unbiasedly type in there. A number of people were like, oh yeah, it was recommended by a third-party recommendation. So like a real estate agent, an accountant, financial planner. And then there were a smaller percentage of people that are like, oh yeah, right, I jump on Google. But I guess the takeaway from this one is just the thing that we saw driving sort of broker adoption or people selecting a broker is that referrals from family members and friends based on their experiences with brokers. The next thing we went through and asked them are, okay, well, you've used your broker, that's great. What are you going to do for your next transaction? And vast majority of people, yeah, I will definitely use a broker. There was about 35% of people that were like, yeah, look, I'll probably use a broker again, but I would probably look around and just ask a few banks what sort of how stuff works. There were then a smaller percentage of people that look, yeah, I might use a broker again, but I'm going to look at other brokers. So they're not necessarily anti-broker, but they're like, oh, the experience with that broker was so-and-so. And then there was a small percentage of people that lines up sort of with the bad feedback we had. And I said, look, no, definitely not using broker again. One of the really, and then there's one after this. We asked people, look, while you were researching your brokers or looking at them, do you jump onto their social media pages? Do you jump onto their Facebook or their Instagram or any of that stuff? Vast majority of people said no. And I found this really interesting. Some of the follow-up questions we asked on that, like, okay, well, why? Or they're like, well, look, if we want to know what the broker is like, we're going to look up their reviews. I want to hear what people are saying about them. I don't really care about, like, they'll look at the website, but they're like, on social media, you can paint yourself with whatever brush. I want to hear what people say about this broker. So social media wasn't super important for that research process. And on the flip side, we asked, okay, when you go on a website or anywhere else, do you trust the testimonials on a broker site? And majority of people were like, no, I really don't, because you can put whatever you want up there. And I mean, think of your own experience as a consumer. When you jump on anything that has testimonials, if it's a copy and paste or something that can be influenced, you're going to trust it less. Whereas the people that said, look, the people that said no, they told us the stuff I do trust is if it's a third-party review. If it's something where I can see an everyday person like me writing their story, how it worked with a broker, they're like, and a lot of people told us it doesn't really matter if everything is 5 stars. It's sometimes even good to have things in there that are 1 star or a bad experience, because A, it makes you look human. It 2, makes you look like you're not gaming it. And 3, good consumers understand there's unreasonable people out there that you're just not going to be able to make everybody happy. And one of the, I think, really most powerful bits of data we're going to present today is this slide. And so we asked people from that, okay, well, you've refinanced a current deal you've used from your broker, whether it's the same broker or not, but this deal you refinanced, what made you consult that broker again? Sorry, it is the same broker, this scenario. What made you consult the same broker to refinance your deal? 60% of those people, and the stat for the direct to banks was 80 on this, but 60% of people were like, look, I saw an advertised rate, I saw a cashback, I saw something, and I took it to my broker. Small percentage of people were like, look, 20%, our situation's changed. Only 15% of people were like, oh, the broker contacted me, and that's what prompted us to redo my deal. So there's a really, really big gap here between proactive activity the broker does on getting somebody into a new deal versus the customer reaching out after seeing something and going through to refinance. So one of the I'll sort of pause actually at this stage, and Zarko, hand it to you to sort of give the guys some feedback and some of your thoughts on just what we're looking at here.
Yeah, the message in that last pie graph is that there is room for improvement in proactivity. Yep. And there's a lot of windfall if you are proactive. So if only 15% are being contacted by the broker in this study, there's obviously a lot of blue sky there and opportunity there. So the more individually you can contact your client, the more ongoing business you will get. So that's what that gives us. The other message I got from the first pie graph you shared in this suite was the 81% of people who came to a broker because of a warm referral. Mm-hmm. So we had, I think it was 45, 25, and 11 were the 3 numbers. And it was really points to that fandom is well earned. So what I mean by that is, wasn't that long ago that as long as you settled a deal for a client, you had that client for life. They would come back to you. Yep. But now that we have all these options for information, we all carry around a supercomputer with us that bombards us with information. We're given a lot of options to be disloyal. So there's a lot of people waving saying, come look at me, look at this, don't worry about them. And that's happening to your clients. So the more that you can be warmly referred, the stronger your business will be. But how do you achieve that? It's not by accident. Yeah. And it's not enough just to settle a deal anymore. Having in your business plan a process to actually turn settlements into fans of yours is a tangible asset in your business as we move into 2022. So people are now starting to emerge and they want to hear recommendations. So if you don't have that structure in place, that is a massive opportunity. Because as we saw in that pie graph, 81% of introductions came from a warm referral rather than someone just randomly finding you online. So strangers in general are bad for your business because strangers will shop you, strangers will pump and dump you, strangers will use and abuse you. You want to nail that referral and fandom piece. When they're fans of yours, they're less likely to shop. And that's why it really correlates to that. How many people looked on social media was almost like 81% were warmly referred and only 25% looked on social media because they've already been sold by the referrer. Mm-hmm. So it's a real powerful opportunity there.
Yeah. Dan, any feedback from your side? Any questions?
Yeah, no, I mean, it was, I just see, because obviously the comments and postings on Finance and Coffee is always very interesting. There's always, there's, I know X Bank has done a promotion and so forth. Mm-hmm. But your study just proved that, that's almost like a free ad for the customer to, get something in their head to contact their broker, right? And I think that's where, as brokers, you should actually embrace that and use that free marketing and then talk about that. The other side. Sorry, Paul.
You go. No, sorry. Continue making your point. Go ahead.
Yeah, I know. And then the other thing was just with regards to community groups. I look at my own situation. When I went and sold my house. Yes, we did the reviews of the websites. We did look at Google reviews. We looked at individual websites and so forth. But what sort of helped us decide to do something was we actually jumped into certain community groups to ask, who did you use? What was the outcome? And we got those more. So we were more swayed by those conversations than we were on a Google review, because it was, I suppose it's the Google reviews. There's sometimes you can actually buy people to buy businesses to leave reviews on your pages, right? And you hear those rumors, which makes you not really tend to believe them. Whereas when you go into these certain Facebook groups, there's men's financial advice. There's community groups where you buy, sell, and exchange things. People ask those questions, and I see brokers are in there too. And you've got fans in there going, "Hey, I've used Bob from Yarraville. He's awesome. So go to Bob." So
you're totally right. There are, and I didn't. That was one of my big learnings from this is I didn't realize the power of those groups and that there were so many, because for consumers, it's actually a really powerful thing where you can create a really niche group. Like one guy was talking about how he joined a Perth, I'm building a house in Perth group. And it's just everyone who's built a house jumps in and talks about things that worked and didn't. And you look up on Facebook, just type in random stuff related to sort of ways brokers help or the home buying process or investing. You will find tons of groups of people that just create these groups and invite people in, and you just share your experiences. And that is where you see a lot of recommendations for brokers, or you see a lot of tips on working with a broker, or even people jumping in and saying, "Oh, I went to this bank or did that," and actually telling a total nightmare of a story on how the transaction actually went. Deanne, I sort of partially interrupted you there on your first point. We're talking about free ads for banks and stuff, and I'd actually say it's not quite true in just that one of the things, our first research paper we did, it was just under a year ago. When you cross-reference what we found in that to this study and the point you made, there's actually a really big challenge here as well. Because if your customers, no matter what happens after settlement, if you don't stay in touch with people, they forget about you. They forget about how great the transaction was, how much money you saved them, how much you liked them, or they liked you, or anything like that. If you don't stay in touch with people, that feeling fades. And if you then see an ad, or you see an offer, or you see a really strong recommendation from somebody about, hey, my broker did this for me, you are way more likely to take up that offer than if the broker doesn't stay in touch with you. So the first study we ran actually was, we asked people who had got a home loan within the past 12 months about their experiences with brokers. Quarter of the people we asked said, look, I don't remember hearing, I actually haven't heard from my broker since settlement. I don't think we've heard anything. You've got 15% of people that are like, yeah, my broker always calls me, get regular SMSs, I get a newsletter, I get RBA rate update, I get a series of things that they could recall on memory like that. Then there was a pool of people that about 60%, the majority, were like, yeah, my broker does something to stay in touch. I think we got a phone call. I think I got this. There was something there, but the customer couldn't really articulate it. And I'll jump to that one in a second. But when we ran these people through tests, I shouldn't say tests, but scenarios later on in our study, when we put ads in front of them, the people in that 15% that received ongoing communication after settlement, they display the highest level of trust regardless of how much time had passed. So when we showed them offers, they were like, yeah, that's a great offer, but I would take that to if that rate looks really low, but I don't know anything about this, I'm going to take that to my broker. Or yeah, $4,000 cash back. That sounds good, but there's always T's and C's with this. I'm going to take that to my broker. And then those people were also, because they were stayed in touch with, because that service didn't end at settlement, they all talked about referring family members and friends. So the people in this 15% here, I'm sure many brokers on this, watching this now, are like, yeah, I do that. You're going to have a few people in this 60%. You're like, okay, well, are my customers actually going to, if they see an ad, do you think they're going to come back to you? And then obviously, if you're not doing anything to stay in touch with your clients, and if they see a really strong ad, do you think they're going to come back to you with that offer? Or do you think that they are going to make an inquiry with that bank? On the flip side of things, when we asked that same questions to bank borrowers, 95% of people were like, yeah, my bank does absolutely nothing to stay in touch with me. And I feel basically no loyalty to them at all. So when you sort of cross-reference this on what made you consult a broker again, and it's seeing an advertised rate, and you look at that and you compare it to the only people that are going to be taking that rate back to their broker are the ones that are remaining loyal because they've stayed in touch with. And I'm not saying staying in touch is just email or it's just SMS. Calls and reviews are a big part of that. But think in your own business and think in your own database and clients you've helped and that you have not stayed in touch with. If they see a really good offer, they heard a really good story about something, do you think they're going to take that back to you? Or do you think they're going to make an inquiry and look around and see what else is out there? Zark, I'll maybe throw it to you on this point and get you to add some color in here.
Yeah, so the message is clear. If you want to write more business, call your database.
Yeah, totally.
I think that's what those numbers tell us. There's a massive opportunity to write more business if you speak to your database. And everyone has the intention to stay close to their database, but life gets in the way and new business gets in the way. So if you don't have the capacity to do it yourself, hire someone to do it. Hire someone either within the business or external. Now, if you need a referral to businesses that can do this for brokers, and these are ex-brokers who have these stay in contact businesses, just make contact with me and I'll facilitate a warm referral on your behalf. But this is really very, very simple. If you speak to your database on a regular basis, they won't leave you and you will write more business with them. That's the message I get from those statistics that Paul has shared today.
Dan, any feedback or questions?
No, mate. I mean, it's just, you can't, lie from the data. You just saw it. And like Zarko said, it's just, if you don't stay in touch, you're going to lose your clients. So go out there and prove Matt Common wrong that brokers don't do anything to stay in touch with their clients.
Yeah. And like I said before, watch the if you don't believe us, or I hope you do, but like watch the videos and listen to the calls of these people, these 15%, and the things when they say, my broker stayed in touch, and then what happens later on in life when they see an offer, they see something, they're going to go back to their broker. Whereas these 25, they're going to go anywhere, and they're going to be persuaded by anything. So we've alluded to it, and Zarko's made a few points on it, but just like the importance of your database, and it's in my eyes, it for a successful brokerage, it can be your most important asset. And you think on how much work goes into acquiring new people and new customers into your database. They're the hardest and most expensive ones to find. And then the most cost-effective people you're going to ever deal with are existing clients in your database, people you've already done business with, because you don't have to go through the hard work or pay for the lead or pay for the referral of writing the repeat business of people already in your database. But you got to know that your database, because they've taken out a loan, because they've probably shopped around and been on websites, been on comparison sites, they're going to be cookied. They're going to be targeted. You are never going to be able to get around that. Your clients are all going to be seeing offers that are really good, really sharp all the time. And if you don't do something to stay in touch with them, at some point, there will be a tipping point where like that offer looks too attractive. They don't really remember how great their deal is or how unique their situation is, and you have to do something. So ultimately, from what we see, and I think Zarko, I'll throw to you at this point, like the most successful brokers we know, especially at the start of the more kind of a year or 2 or 3 years into their business, they grow their businesses in one simple way, just off of their database and making sure that that's working the right way.
Yes, I agree. It's all about acquisition followed by retention. And those 5 points on the screen that Paul had there, that's a blueprint for your retention strategy. Mm-hmm. I agree.
Yeah. Dien?
I got nothing to add to that. That's pretty spot on.
Yeah, cool. So we round out a few like just tips on, obviously we're a marketing platform. So there's these studies we do. Obviously we collate research like this, but we also ask a ton of questions around creating a better product and creating emails that we know people will like or interact with or ultimately find value in. One of them, I think my most interesting learnings off the first research study we did was the number one factor that actually influences somebody opening your email or not is actually just if they know you. And I think sometimes, especially in marketing, you get so bogged down in all the different tactics, all the different strategies, all the different things you told you need to do or need not to do. But when we run these studies, we ask people, would you open this or would you not? It comes down to, well, yeah, maybe. But if I know the broker, yeah, I'm definitely going to open it. Or if I know this person, I'm going to open it. So that's the biggest thing. There's such a correlation between the relationship you have with your database and your open rates on stuff you're going to send. If you have we have brokers who sign up with 100 customers who they know every one of them. They're like family in a way. They have open rates of 70, 80%. We have then brokers who have bought a database or inherited one off of like an agent or something with 2,000 people in their database. They send the same email. They can't even get an open rate of 5% because these people don't know the broker. They have no context for really hearing from them at all. So in a scenario when you don't know the person you're sending emails from, we found with people, they're more open to receiving emails from a business they don't know rather than a person, because with a business, they can look them up, they can Google them. It kind of feels a little less like a scam. I think on the email side of things, especially newsletters or even any kind of evergreen content, people just hate getting sales-like stuff. People really don't like getting an email that's like, hey, here's an offer, here's a flashy rate, here's my customer service philosophy, here's how I can, here's how I saved somebody 10,000. Maybe that's not the best example, but stuff that seems sales-like or promotional just turns people off right away. And the second side of it too is people don't, especially newsletters, they don't read them. They open it, they scan it really quick. Your eye kind of does a bit of a Z, and they make a really quick decision on, okay, am I going to read this or scroll through it? Now, people do eventually read certain bits of content they like, but you need to design a newsletter or any kind of email to match the way somebody scans through things. So, we've done a lot of different things we used to have lots of book free appointment buttons or even broker photos. When we ran those through tests with these people hated it. And even the data we saw sort of in the back end of our platform showed it really turns people off. They open the email, then they get right out of it because you got all these sort of different distractions. When we removed all of that and made our intro section much simpler, the interactions with our emails went up 4,000% because it was so much simpler, cleaner, and really concise for the customer. Hey, I'm getting an email with these 4 things happening in the market that might affect me or save me money, time, or improve my situation. Subject line is another good one. There are so many different things you can read out there on what to put into your subject line. And I can honestly tell you there's some high level things that definitely kind of matter, but it really, really doesn't influence things as much as you think. What influences it more is just how much your database knows you. Same with sending the date and time you send things. Honestly, you can send most emails pretty much any time of the working day, and you're going to get the exact same response. So the success of using email marketing or even SMS marketing to your database can skyrocket with a better quality of relationship with your database. It's the one factor that just influences everything we see. Zarko, I might maybe throw it to you, just add some color into the tips I'm talking about here.
So having listened to the video interviews that ActivePipe recorded as part of the 2020 white paper that was published, it is very interesting to hear what people will say time and time again about what they do and don't like about the emails we are currently sending. So I do encourage you, do yourself a favor, get your hands on that white paper and watch the videos. The videos will give you a lot of insight into the preferences of your clients and hopefully your future customers.
Yeah. Do you have any feedback from your side before we move on?
No, well, the only feedback is just the fact that you're either a brokering business or you know how to keep in touch with your clients with these email marketing strategies, and you can't be both. So even ourselves, we run a weekly wrap on our email distributions, and just I don't do that myself anymore. It takes too long. The open rate was disheartening, so I got someone else to do it, and they're using and we've gone through a few businesses ourselves just to get it right as well. But even then, it's not the 70% like you're saying. It's just it's around the 30% mark. So I definitely encourage brokers to definitely look into this, because at the end of the day, you look at yourself in terms of how many emails you yourself get per day. Then you think about your clients. So how are they going to open your emails if it's just the same thing time and time again, right? So
yeah, totally. Oh, it's a great segue into just look, thing is, and we see this with so many brokerages. At first, a lot of groups we're going to do this. We'll find the time. We've got the processors or the people in place, but eventually, everyone just says, "Look, I don't have time to do all of this." So that's where I guess we can help ActivePipe. We can help you remain relevant to your database when ultimately you don't have time to speak to them. So we integrate with the vast majority of CRMs in the industry. We do monthly newsletters, lead nurture funnels, post settlement campaigns, birthdays. So we can communicate with all the different leads and clients you have in your database. You can also use us to create maybe your own type of campaigns or drip feeds or funnels. We can give you a really good view into the analytics happening behind the scenes. So all your CRMs are really great for processing deals and looking at past behavior or past things. ActivePipe can give you a view into the way they're behaving now and profile them into suggestive things to say, hey, this person is looking like they're going to be financed. This person is behaving like this because they're interacting with all your investor emails and stuff like that. So we sell 2 products out in the market, Essentials, which is basically just the newsletter, and Platinum, the full suite. When you look at how much this costs from an investment point of view, you have to write one deal worth $240K in a year to pay for the subscription. So I guess I'd ask the question, if you think you've got if you think your database and the way you operate now, a deal that size is not going to slip through, then awesome, you've got stuff set up perfectly. If you think there's a chance one deal of that size might not make it through, we can definitely give you a positive return on the investment. Our website's there, my email address and phone number as well. If anyone has any questions, even if you just want to sort of spitball ideas on things you're doing, more than happy to share our experience with different things and give people some advice. So I'll sort of end the presentation here and pass back to you, Zarko, if there's any sort of final thoughts or anything from your side.
I think the message I get from today is that this data gives us opportunities and options. So we've done a lot today to articulate what we see the opportunities are. The option you now have is to ask yourself, would they work in my business?
Definitely. Yeah. Dan, buddy? Oh, you're muted. You're muted, buddy. We can't hear you.
Damn it! You think I know how to do this by now? The only thing I've got to add to that is that you look at the monthly cost of using ActivePipe versus we did a video about this previously, Paul, where brokers will spend thousands of dollars per month to get Google analytics or Google SEO, and the cost per click versus and how effective that is to actually get one deal is it's silly, and you're not gonna basically outspend a big organization like Aussie Home Loans to get the clients to click on your stuff. Yep. Whereas what you guys are offering in terms of the keeping in touch with your own customers is it's going to be priceless. So that's what I got to add.
And it's the online lead gen game. It's where the big businesses play. It is super hard for small brokerages or single brokers to compete in that space. And I think the research we see, though, is that the broker community, the broker market is so driven by personal relationships. It's so driven by personal interactions and stories and personal referrals, because the nature of the job is so personal. You're looking through my financial information. You're looking through my life. You don't want to leave that. I don't want to leave that up to a Google search or somebody that I find on the internet, right? You want to find a broker that you will know and trust, and you will often find that broker from asking your family members and friends what their experiences are like.
Yeah. Absolutely.
Yeah. Cool.
Well, thank you for taking time, both of you, today to chat to the FNC audience. Any last words from both of you guys, Paul or Zarko?
Zarko, you want to go?
So I just want to wish everyone all the best in this run down to the end of 2021. It's been quite a year, and 2022 will be even more exciting. So watch this space. So have a happy and a healthy, enjoy yourselves, work hard but not too hard, and help as many people as you can.
That's awesome.
Yeah. Dan, no, thanks a lot for hosting the session, and just all the brokers tuning in. Thanks for all the support, and I really hope the aim of doing this is just to give value back into the community and into the industry. And if one person learns one thing from watching this, I feel like my job is done, and I feel really proud of it. So thank you so much for joining us. And Zarko, on your side, man, thanks a lot for joining as well. It's just time out of your day.
Thanks for the opportunity, Paul. Thanks for the opportunity, Dan. Great to be here today.
No worries. Well, we'll get you guys to come back in the Q1 next year to have an update on this day. But no, thank you again, guys. Have a good week.
Sounds great. Thank you. Bye.